Hey guys, we're here in Arlington, Virginia to discuss the untapped value of the properties behind me, home equity, and how you can access it. So let's dive in. As a homeowner, you have access to a special tool that renters don't have. Home equity. Home equity is the difference between the estimated value of your home and the mortgage value you owe. Home equity is the untapped piggy bank locked in your home. There are two primary ways to unlock the piggy bank: a home equity loan or a home equity line of credit, also known as a HELOC. Listen up, people. Leveraging these credit vehicles assume you actually have a reasonable level of home equity accumulated and good to excellent credit scores. If this is not you, perhaps this is not the video for you right now. But regardless, a good resource for exploring home equity options is Bankrate.com, link in the description below. Both of these credit vehicles require extensive paperwork up front and an approval process that can stretch on for months. So it's important to be aware in advance whether your need fits in the sure thing or maybe one day category. For the sure thing bucket, where an upcoming major home renovation expense is scheduled and budgeted, a home equity loan is a preferred option. Why? Interest rates are lower compared to a HELOC, and monthly payments are always fixed over a 5 to 10 year period. But borrower beware, the loan is secured by your home, which means that if you fail to repay the loan, the lender can foreclose on your home and sell it to recover the debt. Now onto the HELOC, which best fits into the maybe one day category. In addition, the HELOC can also act as an extra layer of defense for a future unknown life emergency. For more on financially preparing for life emergencies, please see my full Ando Arashi video. Back to HELOCs. A HELOC is a type of loan that allows you to borrow money against the value of your home, up to a certain limit. Unlike the home equity loan, a HELOC does not have a fixed repayment schedule or interest rate. Instead, it works like a credit card. You can draw money as you need it and pay it back with interest. Having a HELOC in place is an extra layer of peace of mind, even if you never end up using it. How does a HELOC work? A HELOC has two phases: the draw period and the repayment period. The draw period is the time when you can access your credit line and only pay interest on the amount you use. The draw period usually lasts for 10 years, but it can vary depending on the lender and the terms of your agreement. The repayment period is the time when you have to pay back both the principal and the interest on your balance. The repayment period usually lasts for 20 years, but it can also vary depending on the lender and the terms of your agreement. What are the advantages and disadvantages of a HELOC? A HELOC has some advantages over other types of loans, such as flexibility. You can use your HELOC for any purpose and withdraw money as you need it, up to your limit. Affordability. You only pay interest on the amount you use, not on the entire credit line. Let's digest that some more. Let's say you establish the HELOC for $100,000 in year 1, never touch it until year 5, and then only need to borrow $50K. Your interest and principal payments will only be for $50K, vice $100K. In addition, the interest rate on a HELOC, while higher than the home equity loan, is still usually lower than personal loans or credit cards, and it may be tax deductible if you use it for home improvement purposes. However, a HELOC also has some disadvantages that you should consider, such as variable interest rate. Unlike a fixed rate loan, the interest rate on a HELOC can change over time based on market conditions and the lender's discretion. This means that your monthly payments can increase or decrease unpredictably. Risk of foreclosure. Since your home is used as collateral for the loan, you risk losing it if you fail to make your payments or default on your loan. Fees and charges. Depending on the lender and the terms of your agreement, you may have to pay fees and charges for opening, maintaining, or closing your HELOC. These fees can include application fees, appraisal fees, annual fees, cancellation fees, and more. A HELOC or home equity loan can be a convenient and affordable way to access the equity in your home in order to finance your life goals, as long as the risk is properly mitigated. If you have more questions, please go to ando-arashi.com and schedule a meeting. Hey, if you enjoyed the video, hit that like button. Subscribe. Keep watching Ando Arashi for more videos.